Hi everyone, I hope you all safe and healthy with your family and friends. In this video we are going to learn about 11th Standard Accountancy, Chapter 10, Depreciation Accounting, Exercise sum number 9. Let's read the transaction. That is, on 1st April 2008, Sudha and Company purchased machinery for Rs 64,000. To install the machinery, expenses incurred was 28,000 rupees. Depreciate machinery 10% per annum under straight line method. On 30th June 2010, the one out of the machine was rupees sold for 52,000 rupees. The books are closed on 31st December every year. Show machinery account. So what we have to know? We have to find what they given. Listen, we have to note 3 points here. When they purchased, when they sold and accounting period. The purchased date on 1st April 2008. The sold of asset dated on 30th June 2010. And the closing accounting period is 31st December every year. Okay, what we have to do? We have to calculate the profit or loss of the sale of machinery and prepare the ledger account for machinery account. Let's calculate the profit or loss on the sale of machinery. When this Sudha and Company purchased an asset rupees 64,000 dated on 1/4/2008. That means 1st April 2008 they purchased an asset rupees 64,000 entered, and on the same day they installed the machinery. Okay, how much rupees? The installation charge is rupees 28,000. We have to add these both amount. So 64,000 plus 28,000 we will get 92,000. This is the original cost of the machinery. Now we are going to find out 3 years depreciation. Okay, first we take first year depreciation dated on 31st/12/2008. We have to find which method we are going to follow. We are going to follow the straight line method. So whenever you use the straight line method, you have to use the original cost of the asset. The original cost of the asset is 92,000. So every year whenever you find the depreciation, you have to use the original cost of the machine, original cost of the asset. Okay, so for 10% depreciation you have to take 92,000 original cost of the asset, and the depreciation period is, listen here, when you purchased machinery 1/4/2008. What is the closing accounting period? That is 31st/12/2008. So you have to find out the accounting period, that is for the first year. That is, so 1st April means you have to take that whole month. Okay, so April, May, June, July, August, September, October, November and December. 31st/12 means up to December. How many months? 9 months out of 12. The depreciation accounting period is 9 months. Okay, so you have to cancel this. So listen, 3 3s are 9, 4 3s are 12, 1 0 1 0 cancel, 40 0 cancel, 1 4 is 4, 2 4s are 8, remaining 1, so it converted into 12, 4 2s are 4 3s are 12, so 4 3s are 12. These 320 we have to add here. So 23, 2,300 into 3, 2,300 into 3. 3 3s are 9, 2 3s are 6. This 20 we have to carry down here. So 6,900 rupees is the first year depreciation. We have to subtract 6,900 from 92,000. We will get 85,100. Now we are going to find out the second year depreciation. That is, the closing accounting period is 31st/12/2009. So we have to calculate 1/1/2008 to 31st 12 2009. So here we have the whole full year. Okay, so from 92,000 we have to find out 10% depreciation. Listen, why we take 92,000? Because we are going to follow the straight line method. So whenever you follow the straight line method, you have to use the original cost of the account for the depreciation to find the depreciation. Okay, so we have to cancel it. For this 0 is cancelled. For this 0 is cancelled. Now we will get 9,200. This is the second year depreciation value. We have to subtract 9,200 from 85,100. We will get 75,900. Now we have to find third year depreciation. Okay, listen. So the opening accounting period is 1/1/2010. Why we get this 1/1/2010? Because the closing accounting period they are already given in the transaction, that is 31st 12 2009. The next day of the 31st 12 is 1/1/2010. This is the opening accounting period. Okay, now we have to take the selling date. What is the sold date of asset? That is 36/2010. So we have to take this selling date of the asset into the depreciation to find the depreciation value. Okay, so from 92,000 we have to find 10% discount for the accounting period is 1/1/2010 to 36/2010. That is 1/1 means we have to take January 1 fully, January month fully up to June month. Okay, so why? Because June month fully, because 30th 6 means June month fully we have to take to calculate the depreciation value. Okay, so 1 January, February, March, April, May, June, 6 months. Okay, so 6 months out of 12. So we have, now we are going to cancel it. Okay, so 1666, 26 or 12. This 0 for the 0 is cancelled. For this 0 is cancelled. 1 2 is 2. 4 2s are 8. Remaining 1 we have to add here. It converted it to 12. So 6 2s are 12, and then this 20 we have to carry over here. So 4,600 is the depreciation value for the third year. Now we are going to subtract it from 4,600. We have to subtract 75,900. We will get 71,300. This is the book value of the asset. Okay, and they have sold the asset on 30th 6 2010 at rupees 52,000. Okay, so we have to find whether it is profit or loss. So for that we have to subtract the different values, 19,300. So this is the loss of sale of machinery. How do you say? Because the selling value is less than that of the book value, you will get the loss. So this is the loss of the sale of machinery, 19,300. Now we are going to find out the machinery account on ledger account. Okay, so in the books of Sudha and Company, the format of the ledger account is debtor and creditor. Date, but we have to find, we have 4 columns on debit side and credit side, that is date, particulars, JF amount, and credit side we have date, particulars, JF and amount. Okay, so on when you purchased machinery on or when you purchased asset, what is the journal entry? Machinery account debtor to bank account dated on 2008 April 1. Bank account is to be credited. Okay, machinery account is on debit side. You go to debit side. The opposite account is bank account. So to bank account amount 64,000. Okay, so you spent installation charge rupees 28,000. What is the journal entry for installation of the machinery? Same, machinery account debtor to bank account. Machinery account is on debit side, so you go to debit side. We have to enter the opposite account, that is to bank account on the same date, rupees 28,000. Okay, then At the end of the year, you have calculated depreciation account, that is 2008 December 31, amount is 6,900. So we have calculated first year depreciation dated on 31st/12/2008, amount is 6,900. We have enter here, okay. So what is the journal entry for the depreciation account? Depreciation account data to machinery account. Machinery account is on credit side, so you go to credit side. The opposite, you have to enter the opposite account, that is depreciation account. So dated on 2008 December 31, by depreciation account rupees 6,900 we entered. Then we have to find which side has higher value. Of course debit side has the higher value, that is 92,000. So we have to total 92,000 on both side, debit and credit side. We totaled, okay. Which side has lesser side? Credit side has the lesser value. So we have to subtract 6,900 from the total, that is 92,000. We will get 85,100. Okay. So this is the closing balance of the depreciation account. This is the closing balance of the machinery account. Okay. So that 85,100 we have to brought it to the opposite side and enter it below the total. And against this we have to write to balance brought down, and we have to enter the next accounting period. The closing accounting period is 31st December 2008. The next day of the from the 31st December, that is January 1, 2009, January 1. This is the next accounting period of the machinery account. This is the opening balance of the next accounting period. Opening balance of the machinery account is 85,100. And we have to find out the machinery account, second year machinery account, that is we have already calculated second year depreciation value, that is 9,200, dated on 31st December 2009. What is the journal entry for the depreciation account? Machinery depreciation account, machinery account data to depreciation account 9,200. So machinery account is on credit side. We go to credit side, we have to enter the opposite account, that is by depreciation account dated on 2009 December 31, 9,200 amount entered here, okay. Then which side has the higher value? Debit side has the higher value, that is 85,100. We have to enter it. We have considered it as a total. So we have to enter the total on both debit and credit side. We entered it 85,100. Then we have to find the difference. So for that we have to subtract 9,200 from the total 85,100. We will get 75,900. This is the closing balance of the depreciation account. Okay. Same date, December 31. We have to enter here. Then we have to brought it down, that is 75,900 brought to the opposite side and enter it below the total. Against this we have to enter to balance brought down dated on 2010 January 1. This is the next accounting period, because 31st December is the closing accounting period for the machinery account. The next accounting date is 2010 January 1. To balance brought down 75,900. This is the next accounting period of the opening balance of the machinery account is 75,900. Then we have to enter the third year depreciation account. So the journal entry is machinery account data to depreciation account. So machinery account is on credit side. So we go to credit side. We have to enter it the opposite account, that is by depreciation account dated on 2010 June 30, because we have already found third year depreciation value, that is 4,600, dated on 30/6/2010. Why we take 30/6/2010? Why? Because when they sold an asset, the dated on 30/6/2010. So we have calculated the depreciation value on the same period. Okay. So for that we entered June 30, 2010 for the depreciation account rupees 4,600. Then we have to enter the selling account. What is the selling account? That is, when you purchased asset, the journal entry is machinery account data to bank account. That means asset account data to bank account. When you sold asset, the journal entry is bank account data to machinery account. That means asset account, bank account data to asset account. So where is asset account? Asset account is on credit side. So you go to credit side, we have to enter the opposite account, that is by bank account. Dated already given in the transaction, that is June 30. Okay, so June 30 by bank account, they sold 52,000 rupees. We entered here. Okay, then you have to write the profit and loss account here. When you get loss, you have to enter on debit side. Whenever you get profit from the asset, from the sale of asset, you have to enter the profit on credit side. Okay, so the same date you have to enter here, June 30 by profit and loss account rupees 19,300 what you get. Okay, so which is we have the same amount on both side. Okay, so 75,900 on debit side. Credit side we have to total, we have to add it, 4,600 plus 52,000 plus 19,300, we will get 75,900. We have the same amount as a total on both debit and credit side. Okay, when you whenever they ask to find profit or loss account, you will get the same account on the ledger account. Okay, do you have any doubt? Please comment it on the comment box. Thank you. Take care.